Hi, I'm Jagir. In today's video, we're going to be covering three topics. First, top tip, life lesson. Always important to be developing. Second, has Dogecoin come to its end of its 5-wave Elliott Wave pattern? What's likely to happen next with Dogecoin? You're probably wondering, who am I? Well, I've been trading Forex currencies for over 15 years. I actually got published in the best-selling book and featured in High Probability Trading Strategies in 2008. And we're going to use some of this in the crypto markets today. I'm also the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Now today, we're going to be using a lot of Elliott Wave and Fibonacci theory. If you're brand new, I got a basic guide. Click the link and it kind of covers the basics. But let's jump straight into the video. Have patience. Everything is difficult before it is easy. So you're going to be jumping into Elliott Wave. I'm going to cover it at quite a high level. So don't be too concerned if it feels difficult or overwhelming, because everything is difficult before it is easy. It's practice, 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 and more purposeful practice. Repetition is the mother of all skill. So remember, have patience with yourself more than anyone else. Everything is difficult before it is easy. All right. If you like my energy, my vibe, the education that you're going to be getting, like this video, share it, comment, subscribe, hit the bell notification, because I'm going to be bringing you more and more timely information. Today is about Dogecoin. It's going to be something really, really important. But if you like it, subscribe, hit the bell notification. Let's jump straight in. So we're going to be looking at Dogecoin on 4 different time frames. The first one that you're seeing here is a weekly chart. And the thing I want you to pay attention to the most is the momentum indicator at the bottom of the screen. You see this down here? Right, this, when it crosses over, this is a stochastics RSI. Don't worry about that in detail right now. But when it crosses over, it normally suggests that the price is overbought and we should be seeing something moving towards the downside. But to give us more information, let's now jump into a daily chart, because a weekly chart, every bar represents 1 week. But now we want to look at it where every bar represents 1 day. So I've drawn out here the exact same chart. The pattern that I see when it comes to Elliott Wave theory is textbook. It's beautiful when it unfolds like this and we can anticipate what's going to happen next and at what price point. In terms of probability, remember, we're always looking to get the probability in our favor so we can make the best investment decisions when it comes to entry and exit, so we can maximize our profits. So here, what do we see? We see a nice 1, 2, 3, 4 and a potential wave 5 high. But also down here, you look at the momentum on a daily chart, it's also overbought. So that's suggesting that we might be seeing a top of a wave 5. But now let's draw some Fibonacci lines. So for a wave 5 high, typically, if you measure from the wave 1 low to the wave 3 high and project it from the bottom of wave 4, the maximum, typical maximum, and the word is typical, is 100% price extension. So we just measured from the bottom of wave 1 to the top of wave 3, projected from the bottom of wave 4, and now we have this 100% price projection. And typically that's where wave 5 hits its maximum. Typically, more common is at 62%, but you can see it's been overextended because a lot of people do panic buying, FOMO, fear of missing out. There's another Fibonacci ratio that is really, really helpful for us to indicate are we reaching the top over here, and it's called the price extension. So we measure from the wave 3 top to the wave 4 bottom, and typically it's 1.27, which is 127%, and 1.618, which is 162%. Now we have this beautiful price zone that our wave 5 typically ends. This is powerful information, right? Because if you're in Dogecoin, you should be possibly considering tightening your stop loss. So you might be looking to exit soon. Or if you're looking to jump in and FOMO into Dogecoin, maybe think twice. So if we now jump in, because now I want to pay attention to this last part of the leg. Because if you remember from my previous lessons, wave 5 actually breaks down into 5 subwaves. So let's zoom in on a 4-hour chart where 1 bar represents 4 hours and see if we can see a pattern unfolding. So let's jump straight in. So this is the 4-hour chart now. I'm just really focusing on this last part. And if you see it, And again, remember, everything is difficult until it becomes easy. So with practice, you'll see this more and more. But here it looks like it's making a 1, 2, 3, 4, and a final 5th wave. And I've drawn a few more Fibonacci lines on this time frame, and you'll see this line here is the 100% extension from wave 1 low to wave 3 high, projected from a wave 4 low. Now we have a cluster on multiple time frames suggesting that we're coming up towards a wave 5 high. This is a time to be very, very aware if you're in this position or looking to get into this position. So last but not least, we're going to look at this last leg of the wave. Because remember, on even the largest time frame, the micro time frame, and even if you go further in, the last 5 waves actually break down to a further 5 again. So now let's jump into a 1 hour chart. So now I've zoomed into this last part where every bar represents 1 hour. And it looks like we're seeing the same thing again, which is the further 1, 2, 3, 4, 5. So this is a wave 5, other wave 5, other wave 5, right? And when you have a price cluster in that zone, that is a very high probability resistance zone because it's all baked into the mass psychology. So now what I want to look at, well actually, one more thing. So you see the momentum here, the indicator, potentially we might see one more leg of this wave around this zone. And this indicator helps determine, is it going to be, so when it gets to overbought, we're probably going to see it coincide with an all-time high of Dogecoin. And then we may go on to see a big correction. So now let's just zoom back out. Let's go back to the daily chart. And let's just assume for a second that this is the high or the nearabouts the high. What typically happens? Well, typically what happens next is I'm going to do a time retracement. This is powerful. Most people don't know this. Typically from a wave, the beginning of the wave to the end of the whole 5-wave run. Let's do that one more time so I get it bang on. The correction that tends to follow tends to be 50% of the time going forward. So if I just project that forward, I'm just going to change it here and make sure it's selected as 0.5. So now we've got this blue line. You see this here? This is dated as the 21st of June. We may see a correction in Dogecoin that goes all the way up to the 21st of June. That's what? That's nearly 2 months. 2 months, 6 weeks to 8 weeks, we might see sideways to down. In terms of price, typically a correction after a wave 5 high, let me just measure it here, is 50 to 78.6%. And in between there's also another key ratio which is 62%, or to be more precise, 618. So now we have this time and price zone where we may see a correction of Dogecoin. So if this ends up being a wave 5 high, which is highly probable, not guaranteed. This is crypto land where gravity doesn't exist and people are FOMO winning, so it could kind of overextend, but it seems to be overextended already. So then last but not least, let's just look at what that may look like if it does correct this way. So let's just say we get the wave 5 high. Typically we'll see 3 legs, a wave A, a wave B, and then a wave C. And it will probably go into this zone, something like this. And we want to be hyper aware. So, you got the lessons, right? Doge looks like it's coming to a wave 5 high. Not guaranteed, but it's highly probable. So you might want to tighten the stop. If you're looking to FOMO in because you're seeing the news, there's a top 5 coin now and it's exploding, it's 40 cents going to 60 cents. Now might not be the best time. So it might be best to be patient, wait to the correction. And then if it does a nice clean correction and it's still the bull run and it's still bullish, June, mid-June might be a much better time. So if you've liked this content today, subscribe, hit the bell notification because I'm going to do this daily now. Every day I want to bring you valuable content to increase the probability of you making great profits and minimizing the downside. If you like this also, hit the like button. I really appreciate it. And I will see you in the next video.